So the IRS in the beginning of October just released their 2026 tax and capital gains bracket updates. So if you're an entrepreneur, an investor, a high income earner, these updates are going to be critical signals for financial planning this and next year. So this is going to impact everything from business income, you want to sell an asset, to potentially saving you thousands in taxes. And today, I'm delivering a straight to the point news update on the 3 biggest changes you need to know: new income tax brackets, the updated capital gains thresholds, and the higher standard deduction. So let's get into it. So the first one is the 2026 federal income tax brackets. This is going to impact your ordinary income. The 7 tax rates themselves are not going to change. It's still 10%, 12%, 22%, 24%, 32%, 35%, and 37%. And you can see that I've included a chart there from the IRS if you want to know the exact ranges. Now, what has changed that's important to update you on is the income thresholds for each bracket. So there's inflation adjustments that the IRS made for next year. So each bracket is a lot wider now, meaning you can now earn more income before being pushed into a higher tax bracket. So for the 2026 tax year, that top 37% tax rate for single filers, it's not going to apply until your taxable income exceeds $640,600. Now, for married couples filing jointly, that threshold is now up to $768,700. This is a great update if you're a high-income business owner. As an entrepreneur, you might have pass-through income and it previously would have fallen into that top tax bracket, but because it's a wider range now, you might only hit a top marginal rate of 35%. And from 37 to 35%, that's creating an automatic tax savings for you right there without doing any advanced planning. So this is a great sign for anyone with that higher income range. And then the next thing that they did was they updated the 2026 capital gains tax brackets. So each of these are still the same. It's the 0, 15, and 20% ranges. Nothing changes there, but like the income brackets, the thresholds have been expanded for 2026. So for married couples filing jointly, that highest 20% rate is now only going to apply once that income exceeds $613,700. And for single filers, that's going to be about $545,000. So if you're planning on selling major assets, you might have real estate in your portfolio that you want to sell, you have a stake in another company you want to sell, or maybe it's just stocks and crypto in your portfolio, this change is significant. That wider 15% bracket, it's going to provide more room to realize those gains that you're seeing without triggering the top 20% rate. This is going to give you more flexibility and certainty when timing the sale of your investments. Again, like the ordinary ranges with capital gains, if you're just going from 20% to 15%, it's going to be automatic savings right there as well. And then the last update is the 2026 standard deduction, also getting a notable boost for the 2026 tax year. So for single filers, it's $16,100. And married filing jointly, it's going to be double that, so $32,200. You can see from the chart the changes between 2025 and 2026. And so now I know a lot of high income business owners, usually they're going to itemize their deductions. You probably have a lot of write-offs that you want to use, so it's going to be higher than that standard deduction. But the increase in this is still a good sign and a foundational shift in the tax code. It's going to directly impact baseline tax calculations and provide a higher floor for deductions across the board. More deductions, more tax savings, only things that are going to benefit you. So in conclusion, these are all 2026 inflation adjustments from the IRS, and it's going to help you with future financial planning. The key takeaway, if you're a business owner, is that the tax brackets are wider for ordinary income and capital gains. And this provides a small built-in tax cut so that you can earn more and invest more before you hit those higher tax rates. And as you plan ahead for the year, be sure to account for the new higher thresholds. And yeah, if you found this update helpful, hit that like button and subscribe for more tax and financial news for entrepreneurs. And if you want help implementing this and over 50 advanced tax strategies so that you can save more on your taxes, you can work with my firm, Capital Hawk, what we'll do is create a custom tax reduction plan for you so that you can stop overpaying the IRS and then reinvest that money back into your business or buying personal assets. If that interests you, you can go to our website at capitalhawk.io and check out our offer there.